Good afternoon, everyone, and thank you all for coming to have a look at the webinar from Spirits Victoria for today, which is the Distillery Profit Tap, how to run a profitable distillery even in tough times. My name is Jeff Rolls. I'm the host for this session. I'm the Secretary of Spirits Victoria and have met most of you over the last 4 years of our journey at Spirits Victoria. Today's session will be presented by Ian Senior, the Treasurer of Spirits Victoria and an accountant by trade operating the business for Refresh Accounting. Ian has over 20 years of experience in the drinks industry, working with bars and restaurants, distilleries and wineries, including working as a general manager at the iconic Margaret River Winery, Cape Mentelle. Ian works with owners of distilleries, wineries and breweries to show them how to run a profitable business, even when times are tough. Finally, there are some administrative matters I need to cover. This session will be recorded as part of the Spirits Victoria Association webinar series and may be published on our website. We have enabled the Q&A function for those watching live, and you'll be able to submit questions here. We have allocated some time at the end of the session for Ian to cover those issues and answer some of those questions. But for those who that we don't have time to cover, we will try to come back to you after the session. The presentations used by Ian today may, subject to privacy requirements, be available for distribution after the session. If this is the case, we'd have details on our website. I'm going to, before I go any further, I'll apologise for our technical problems that we had a week ago. We did struggle to get our technology to work for us, but hopefully we won't have any problems today. I'm going to bring Ian on, and Ian's going to run through his session with you just now. Ian.
Hi, thank you, Jeff. Thanks for the introduction. Thanks to the SVA for the opportunity to present the webinar, and obviously thank you to you all for registering for access, being online today, registering last week too, and I appreciate you taking time out of your busy days to spend it with me and engage in this presentation. I should say I've got two screens open because whilst Jeff's team's working properly, mine's still a little dodgy. So we'll see how we go, but hopefully we'll get through this one reasonably well. The process I want to show you will not only benefit you in tough times, but they also help you maximize profits in good times. They maximize the value of your distillery should you be interested in selling it. You know, obviously, efficiently profitable run businesses are worth more than those inefficient and unprofitable. So let's get down to one of the things that, you know, let's dispel a myth straight away. You're not here simply because you love making great whiskey, rum, gin. You're here to get some money, get paid, be profitable, create an asset with value. So we need to make a business that's profitable. Now, I know you're passionate about the spirits that you make. I've been to the conferences, I've stood next to you and tasted your drinks, and I can see the light in your eyes when you talk about what you do. But if you're not getting paid, if you're not getting a reward for the risk and your investment in your business, then you sort of don't have a business, you have a hobby, and probably a very expensive one. The other thing that you lose is time, because you're spending time in your business, and time's a precious resource. You know, there's a finite amount of time, we can probably make more money. And so hopefully what we can try and do is, with the money that we make, buy some time back. There's the challenge, isn't it? You know, started the distillery because it's a passion, but it doesn't lead to profit. Often doesn't lead to profit. You put money and time into it, try and make a go of it, but you're not getting a proper salary. You're not getting rewarded for the risks of running the business, sacrificing time with family, friends, and you've probably been at the stage where you're going, Is it worth it? Am I ever going to get any success out of this? So here we are now, though, with the opportunity. Let's have a look at the system that will show you how to pay yourself a proper salary, reward yourself for the risk that you take and the time that you sacrifice. Show you how to become permanently profitable and make enough money to buy back time so you can spend the time doing the things you love doing. And, you know, it's a system that is simple to use, give you a successful, financially successful distillery. And, you know, those not on this webinar were going, how do they do that? Before I get into the system, I want to tell you why this is my passion, why I want to tell you how to get time, how to make profits. See, where I grew up, there's a village in South Yorkshire. And if you see, you know, Last of the Summer Wine and things like that, you might say, oh, it sounds pretty idyllic, but it's not, because they're often mining villages, which is where I grew up. And you go back to my parents' generation, effectively had, especially as a male in that generation, you had three choices. You worked down the pit and often died from side effects, like both my mum's brothers did at a very young age. You were unemployed, 15, 20% unemployment. Or thirdly, you do what my dad did, which is you had a job and you worked away from home for extended periods. He was a contract electrician, so he'd be gone for 2 or 3 weeks at a time, you know, come home for a weekend, back on a Friday night, probably have a week on a bed, leave late on a Sunday night to go back to work for a Monday morning. And that meant he sacrificed an enormous amount. He was a massive family man. He loved being around all his family, not just us, but obviously his brothers and sisters and my mum's brothers and sisters. So in my family, 2 brothers married 2 sisters, so they're very close. And he missed out on a lot of stuff because he worked away from home, and he worked away from home so that me and my brother didn't have to go and work down the pits. And so when I was going to have my family, I didn't want to do that. And so I worked with my business partner at the time. We spent a lot of time and effort making our business as efficiently as possible. And, you know, before kids, I'd work 5, 6 days a week, long days, but I earned pretty well, you know. But once we were looking at having the children, I didn't want to spend that much time away from the house. So we put the processes in place. And we ended up, by the time we had sold the business, because I was coming to Australia, I was ready to retire, that I was earning as much money as I was previously, but only working 3 days a week. And the added advantage to that, of course, is that having a really efficiently run business that was, actually, for its size, was really profitable, was we maximized the value on our sale. You know, and as it stands now, you know, we come forward, you know, my wife and I had we had the joy of spending a year in a motorhome with 2 cats, 2 dogs, and a toddler. Everybody waving us off, going divorced. But, you know, for us, it was fantastic when we had so much time together and so much time with our young son. And fast forward now, I've had a chance to spend a lot of time with both my children, go to school concerts, even recorded concerts, swimming lessons, taekwondo lessons, ballet lessons, concerts. And, you know, we have spent so much time together, we had long holidays together, that we have a lot in common and we can get on really well. And that's why, to me, it's important that we put systems, processes in place so that we make money, make time, so that we can enjoy other things in our lives. Sometimes maybe the disadvantage of creating time is that you end up volunteering for doing various things. So I've been on school boards, obviously the treasurer for Spirits Victoria Association, and as Jeff said, you know, in the past, I do now, I've worked a lot with drinks industries. Used to be bars and restaurants, now it's more in the manufacturing side, so wineries and distilleries. Lucky enough, as I say, as Jeff said, to work at Cape Mentel in Margaret River. And Domaine Shandong out in the Yarra Valley, amongst others. So I'm the director of Refresh Accounting, chartered accountant, profit coach, and means I'm not a spreadsheet person. I'm sort of more the person who hopefully is going to supercharge your profits. So let's get into the system, okay? Whether you're making a gin, whiskey, rum, whatever spirits you make, you're going to use a system. You follow a process or a system that creates consistent results. And as you keep applying that system, it gets easier, it takes you less time, and you end up with a spirit that you love, want to drink, and other people want to drink. So it's the same with money, right? If you manage the money, managing money is a process. Right? So I'm going to show you that system so that you can create the profit you love, okay? And as I say, I have other people saying, how do they do that? I love this image. So how can we turn on the tap, get cash, profits, as well as spirits out of your stills? So we've got a three-step process. If we follow these 3 steps, you will be profitable, okay? And I'll get you maybe not excited, but at least enthusiastic about you knowing your numbers so you can grow your profit. And the steps are, as they say on the screen, get your house in order, know your numbers, and get profitable. So let's get into it. When I talk about getting your house in order, it's all about knowing where you are now. And that's obviously the best starting point, because if you have a destination in mind, you don't know what's happening now, you can't properly plan to get there, to get to that destination, and you won't get there in anything like an efficient manner. Now, efficiency is another thing that we talk of a lot, because efficiency is time, time is family time, strategy time. Your time to do the stuff that motivates you. So yeah, it's important. So what are we looking at? Looking at getting and keeping your financial record, your bucks, up to date, and managing inventory efficiently and cost effectively. So I'm going to let you into a secret. I actually don't like doing bookkeeping. I know it's important. It's got to be done right. So I know that if bookkeeping is not your thing, it's easy to get it wrong. You can end up with incorrect tax returns, issues with the ATO, especially when you're dealing with excise and GST. And that means you end up spending more time, more money trying to fix things with your accountant. So I said, I don't like doing bookkeeping. My team does my bookkeeping. When my wife had her business, she had for 20 years, one of the first positions we hired for her was a bookkeeper. So I'm going to say this, if you're doing your own bookkeeping, get a bookkeeper. And I know it sounds self-serving, okay? I offer bookkeeping services. But even if you don't work with us, I still recommend get a bookkeeper, okay? And here's another reason why. So my screen is just frozen, just a second. I read a report a while ago. We're back up from it. I read a report a while ago that on average, owners of small businesses spend 5 hours a week doing their bookkeeping, okay? That's eating in a lot of personal time, isn't it? So if we're conservative, let's say be conservative, say that's 3 hours a week. That's 156 hours a year. That equates to 20 days. So just think what you could do with 20 days more time in your year. That's 4 weeks annual leave. 4 weeks to spend with family, doing things you love. So, but the thing is too that you need a bookkeeper who understands distilleries, okay, and their intricacies. So, for example, we started working a while ago with a distillery. They got the GST and excise wrong. So they claimed GST on their excise payments. Now, so they owed a lot of money back to the tax office. So then there's the stress and the time and the money involved in dealing with that. So make sure that's a mistake many of you won't make, but it can happen. So make sure you've got somebody who understands the industry. it's going to simplify your life. And when it simplifies your life, you get back more time to do the important things. You know, like, as I say, perfecting your spirit, marketing, doing the strategy work that you never seem to have time to. And the other thing is to look at an inventory management system. You know, inventory is probably the biggest asset in your business. If you know, maybe in a gin distillery where you go to woe a little bit quicker than something like a whiskey or a rum distillery, of course. But inventory is either going to be the biggest asset or the second biggest asset in your business, right? So managing it is really important. It's really important that you understand what it costs you to make, what it costs you to age and store, what it costs you to package your products. You've got to keep track of it. You know, I have a story of a client who found 200 litres of whiskey, completely forgotten he had. Now, it's a very, very small producer of spirits, but still missing a barrel of whiskey. You know, I mean, luckily he found it as opposed to lost it. So it's important that you keep a track of what you've got. You need a good system. We've got information on our website on reviewing distillery specific software. We're about to go through the review of that. There are more softwares available now than there were a year ago, which is interesting. I think that shows the growth of the industry in general. But I don't have time today to go through those individually. But as I say, go and have a look at the website and look at the review of the inventory management system. And you can use spreadsheets, but they start about $120 a month, which is very well worth the investment. So have a look at the inventory management system. Get a system in place so that you know what things are costing you to make and store and how much you've got. So now we're looking at know your numbers. What do they actually mean? Now, over the years, I've met a lot of businesses that don't understand what a P&L is telling them. What's the cash summary? What's on their balance sheet? My wife included. I've worked with clients who've never even opened accounting software, wouldn't know how to do it. I was reading last week that they say you shouldn't put statistics in presentations, but I'm going to give you this one anyway. The research suggests that somewhere between 45 and 60% of business owners don't understand their financials. So, you know, there's a sizable number here that won't understand their financials according to the statistics. So you're not going to be alone if that's how you feel. In fact, you're probably in the majority. So I thought it'd be useful to quickly run through what they are, what it's useful to have some understanding of. And I know you think, oh no, he's going to spend half an hour going through sets of accounts. I might end up nodding off. Don't worry, this is going to be really quick, like 60 seconds, 2 minutes tops. You can time it if you want, okay? So might take a little bit longer because I keep flicking through screens. So what are we looking at? Profit and loss, cash summary, balance sheet. What do they show you? Profit and loss gives you a summary of your income and expenses, subtracting your cost of goods and operating expenses, so that you can quickly see whether you have a profit or a loss. Shows your income, gross profit, operating expenses, net profit. Doesn't show you GST payments, tax installments, loan repayments, transactions like owner withdrawals or deposits or asset purchases. It's good for tax compliance, but there's not a lot of information on actual cash flow. So it only shows you what's happened in the past, right? And we all know the past is not necessarily an indicator of what's going to happen in the future. Cash summary. Summary of the money that comes into your business, where that money came from, and shows you where you spent it. The balance sheet. the summary of assets that your business owns, the liabilities, which is who you owe money to, and equity, which is shares issued and any retained earnings. The essence of it is that it shows you the value of your assets you own and the value of the amount you owe. Okay, so how do we do? Do we do that in about a minute? Have I homered you? Yeah, you clear on what's P&L, cash balance, cash summary, balance sheet? You know, I hardly ever look at my financial statements, maybe once a month. Obviously, you know, I understand them. But if you don't, so let's look at how, if you don't understand P&L, cash summary, balance sheet, then let's look at what you do need to know. From your P&L, you can find your margin. That's your gross profit as a percentage of your sales. That's a good number to know, because if you know that, then you know whether or not it's high enough. You know, you get a good idea of how big or small your business has to be to cover costs, give you the profit that you want. From the balance sheet, look at the value of the stock you've got in your business, understand whether that's high or not. Also know who you owe money to, who owes you money. And from the cash summary, I wouldn't bother. I never use it, right? So P&L, balance sheet, yeah, look at these every month. Maybe as infrequently as every quarter. They don't really help you, though, with your day-to-day management, apart from maybe knowing who owes you money and who you owe money to. From a cash summary, I think there's a better system, and that's the system I'm going to show you how to manage, and that's how to manage the money in your business, right? That's the bit that's going to give you financial clarity at a glance. So let's get on to step 3, get profitable. And this is the part, obviously, we're going to spend more time on. As I said, being profitable is vital. It's how we reward ourselves. It's how we buy back or create the time to do the important things in our lives. When your business isn't profitable or financially sustainable, you're constantly checking your bank balance, hoping you've got enough cash to pay suppliers, your rent, your team, eventually, hopefully, yourself. And a lack of cash is the most stressful thing what we deal with in our businesses, in our lives. I know it's like, I've had businesses like that. I've dealt with lots of clients in that position too. So let me make this clear now. When I say get profitable, I'm talking about having a cash in your business to be able to pay your bills on time, pay yourself a reasonable amount for the work that you do, and reward you, that's your profit, for your investment and the risk that you took on in opening your distillery. Now, I know I talked earlier about outsourcing bookkeeping, and I'll add to that, you should also outsource things that you may not love, that are not in your, what you might say, zone of genius, right? But there's one job that you don't outsource the responsibility for, and that's managing cash in your business. But then when it's your responsibility, and frankly what it should be, they're all part of your business, it means you need to do it efficiently. You need a system that's easy to use, easy to follow, and get you the results you want in the shortest time possible. Now, here's the system I use myself, I use with my clients. I help them implement and put in place a cash management system called Profit First. Now, there are about 1 million businesses around the world using this system, right? So it's a well-proven, successful system. It's a real step-by-step process. You know, my youngest would probably call it a hack, you know, because it actually uses the way we normally behave to deal with cash in our businesses, but do it in a better way. So it doesn't turn you into a financial genius, doesn't give you an accounting degree, but it will make you a business owner who knows exactly what cash you've got and what you need to use it for. So let's have a look at why it works. So accountants have a formula for working out the business profit. And it looks like this. Sales minus expenses equals profit. It's actually the same as your P&L, effectively, isn't it? Sales at the top, expenses, profit down somewhere, hopefully down the bottom. So it's clear, logical, simple, but it has a major flaw in it, in that it doesn't take into account human behavior. When we put profit last, we treat it as an afterthought. It becomes more hoped for rather than planned for. Profit's important, as we said, it's the reward for taking the risk, setting up and running your business. If you don't have profit, you might as well work for somewhere else, get a salary, you stress yourself. So if we work on the assumption that, and well, it's true, sales minus expenses equals profit means that most business owners don't get to take out profit from their businesses. Then what if we flip that formula to sales minus profit equals expenses? Same logic, same words, just a slightly different order. But our behavior changes when we do this. When you put profit before expenses, put profit first, take a predetermined percentage of profit from every sale, then you run the business on what's left. Okay, so that's the logic. So why does this approach work? Now, there are 4 principles behind profit first. And actually, they're based on dietary science, which sounds a bit odd, right? But strange enough, psychological research shows us that the way we manage money is similar to the way we manage diets. As human beings, we naturally default to habits and behaviors that can mean we don't get the results that we want. So instead of trying to use willpower, which eventually fails, force ourselves to do things differently, we're much more likely to be successful if we leverage off natural behavior. So the same principles that help us lose some weight, get fit, eat well, we can use them to grow profit and manage our money well. And these are the 4 principles. Use small plates, serve sequentially, remove temptation, enforce a rhythm. So let's have a look at how do these principles have anything to do with growing a healthy business. Let's start with the small plates. So, when you serving your dinner, the size of your plate dictates pretty much how much food you eat. No matter how hungry you are, you put a big plate in front of you, finish it. If you put a small plate in front of you, finish that. So, it's the same if we put more food in front of us. If we put food on the table, we eat more than we do if we serve it up and then sit down to eat. That's why we stuff ourselves at buffet, but we can go to a tapas bar and just have a couple of small plates and we're satisfied. This is based on something called Parkinson's law. So Parkinson was an economist in the 50s, and he came up with an economic principle which says that the demand for something expands to meet its supply. In other words, we eat whatever's on our plate. So when you use a small plate, you eat less. And that's the same with money. When there's less money available, we spend less. So Parkinson's law applies to your bank balances, because this is how we treat our own business, isn't it? Whatever's in our bank account, that's what we spend. We know that we should be reviewing and analyzing financial statements monthly, more regularly, but let's face it, most of it is done. We've already said that up to 60% of business don't understand their accounts, so they're not going to look at it. And I know that when you're making a decision on paying suppliers, hardly any of you would put your hand up and say that you pore over P&Ls and balance sheets and cash summaries. Pretty much everyone would say that they look at what's in the bank and look at who you money to. So what do we do? We skip accounting and we just access accounts. We default to what we might term bank balance accounting. Check our bank balances every day, make decisions based on how much money is in the account. And just as Parkinson theorized, we use all the cash that we see in our bank accounts. Whatever's in the account, that's what we spend. And this is why profit first system works. It allows you to do what comes naturally, bank balance accounting. So what we do is we harness the idea of small plates by opening multiple bank accounts for a specific purpose. So what we have is all your income goes into one account, call it the income account. And you transfer funds from that account to other accounts such as a profit account, owner's pay, taxes, operating expenses. This then helps you create a clear, organized system for managing your cash flow and business expenses. When you can see smaller plates of money you've designated for expenses, you naturally spend less. So every business needs 5 basic bank accounts. I'll just run through them. So you've got income, profit, owner's pay, tax, operating expenses. So let's just have a quick look through those. So with your income account, all the money that your distillery receives goes into this account. You don't pay bills out of it or any other costs, okay? The only time money goes out of this account is when you allocate what's in there to the other accounts. And this account it's actually seriously useful because you start to get an idea of how much money comes in each week. You get an idea of how much money needs to come in each week. That's the inflow part of your cash. Then we look at profit account. So this account is used to build up profit that you'll use to reward yourself for investing in your business. Profit account has a couple of purposes. It's to build up funds to give you a reward. You can also use to pay down debt if you have any. And you can build up a buffer to be used in emergencies. Now, eventually, we want to have a business with 3 months' worth of business expenses sitting in the account. That's seriously useful when things go pear-shaped, like we've all just come through a pandemic. So if you don't have debt, what you do is take half the funds accumulated in that account and reward yourself at the end of each quarter, leaving half in the account to accumulate towards your buffer. But if you've got debt, and with high interest rates, higher than they have been, you want to pay your debts off as soon as possible. But then what you maybe do is take 1% out of that profit account to reward yourself for your investment. And you throw the other 99% driving down your debt. Get rid of debt because it makes such a difference to stress levels and your life when you don't have debt. But whatever you get each quarter as a reward, no matter how small, you celebrate it, right? Give yourself that dopamine hit that you get when you celebrate a win. When you celebrate something, you'll look forward to doing it again in 3 months' time. And that means you start to build great business habits, one small dopamine hit at a time. Now we look at owner's pay. If you're working in your distillery, you deserve to get paid for that. You should be paying yourself at least what it would cost you to get someone else to do your job, potentially all the 3 jobs that you do. You need money to live on. You've got personal bills to pay. You want to have a lifestyle. And paying yourself what you're worth means you start to value your time and yourself. So many entrepreneurs don't pay themselves properly. And we want to eradicate what I term entrepreneurial poverty. Right? That's why we prioritize profit and paying yourself first. Tax account. You're going to be profitable, which means you'll have tax to pay. So we put cash aside to pay those taxes. So, put in your head, think that tax is not your money. It's going to belong to the tax office. So reduce your stress levels by putting the money aside so that it's there for when you have your tax due. And then the OPEX account. So this is the account that you use to pay for things like rent, staff salaries, utilities, subscriptions, etc. We'll go back to the core principles and we're looking at serving sequentially. The secondary dietary principle that we mentioned earlier. So like if you serve your vegetable first, you'll eat them, fill up on the good stuff, then you eat less of whatever comes next, less cake. And this is to do with primacy effect. It's a psychological principle that means that we're naturally inclined to remember and to place importance on whatever comes first. Serve the vegetable first and we'll automatically balance our diet in a healthier way. Profit first uses the same primacy effect to help business owners focus on profit. Going back to that standard accounting formula, sales minus expenses equals profit. As I said, the problem with this is that it treats profit as an afterthought. And there's usually no nice profit waiting for us. When we flip it to sales minus profit those expenses, we focus on profit because it comes first. So this is how we leverage primacy effect. We serve sequentially, allocate money in a specific order to each of the bank accounts. So we go, money goes to profit account, followed by owners paid, followed by tax, followed by operating expenses. When we prioritize in this way, we ensure that our profit is first consideration. Profit becomes non-negotiable priority, increases our chance of building a profitable business. So just like eating vegetable first means that you increase your chance of getting the right nutrients in your diet, a simple shift in approach will have a huge impact on your financial stability. Right? Now, appreciate, it sounds great, it doesn't happen automatically. When you pay expenses first, you just spend whatever you want on expenses, right? Whatever's left over is profit. When we flip that formula, take the profit out, take owners pay out, take taxes out, whatever's left, that's what you get to spend on expenses. So this is where we have to start getting efficient. In order to take our profit, we have to squeeze our expenses. It doesn't mean slash and burn. It doesn't mean refuse to spend a cent on anything that a business needs. It means being lean and efficient. And actually the interesting thing is that very often businesses can cut somewhere between 10 and 25% of expenses relatively easily. So it means we get focused on our spending. The third core principle is removing temptation. When you're trying to eat healthy, having not so healthy food in the house can be too tempting. It's easy to reach for the chocolate, the crisps, the cake. But if we make sure that's harder to get, we're much less likely to succumb to the siren call of a piece of cake. And it's the same with managing money. One of the biggest challenges is resisting the temptation to dip into funds that should be off limits, especially if things are a little tight. So Profit First addresses this issue by encouraging you to go, put the money somewhere else, out of sight, out of mind. Keep it separate from your day-to-day operating expenses. Put the psychological barrier between different bank accounts, maybe even put them into a different bank. Your tax and your profit for a different bank, excuse me. Sorry about that. So the separation makes it harder to impulsively spend your hard-earned profits on immediate wants. It's very easy with shiny object syndrome. But if the money's not there, you can't do that. And then you keep it until it's time to take the reward or pay your tax bill. And the last core principle is enforcing a rhythm. So again, as in with healthy eating, if you leave it too long between meals and you're starving, you're more likely to binge. Right? But if you eat too often without thinking it through, it means you're always snacking. So just as health professionals recommend 5 small meals a day, Profit First has an ideal rhythm and flow for dealing with your cash. Now, exactly how often you transfer out of your income account into your other accounts depends on your business. General recommendation is usually once or twice a fortnight. And I normally recommend that you allocate funds to the different accounts according to your payroll cycle. Now, if you're like most business owners, you check your bank accounts throughout the day, hoping for money to come in. Then you pay whichever bill appears to be the most urgent, or whoever screamed the loudest or the latest. So it's a really inefficient way, and it means of managing cash, and it creates irregular payments and financial uncertainty, not just for you, but for your suppliers. When you use a consistent system, transferring the funds to the Profit First accounts, you can avoid that impulse spending and the anxiety of low bank balances. So because the system establishes predictable cash flows, provides clarity and stability, and monitoring cash flow becomes effortless by simply checking your bank account regularly, a habit that, as I say, you already have. So there's the 3-step process. Get your house in order. So get your books up to date by using a bookkeeper. Make sure you've got an inventory management system that works for you. Know your numbers. Don't be intimidated by financial reports. You can quickly and easily understand the numbers that you need to know and get profitable. So, we've just discussed the profit first system and how it leverages your natural behavior to help you take control of your cash flow, set the stage for permanent profitability in business. Principles are not exclusive to any industry or business size, so adaptable and applicable to your unique circumstances. By getting on top of your books and inventory, knowing your numbers, using profit first, you'll be on the path to greater financial stability, profitability, peace of mind. So, maybe close your eyes. Imagine what you feel like in 3 months' time. You've got a little pot of money sitting in that account, that profit account, profits that you can do something that if you want to. Look at your bank account every day. You know exactly where you are financially. You know what the money in your accounts is actually for. And it takes you less than 15 minutes a week to manage your cash flow. You feel calm, in control, less stressed about money than you might have ever thought possible. But now you're making great spirits and a great profit. Become a person who really gets the numbers in their business, and you probably feel like you've got the financial shit together. So if that's the person that you want to be in your business, that's my thing. I'm here to help with that transformation. But remember that you can't transform your business by waiting for it to happen. It requires action. So, book a call and we can talk about how I can help you make your distillery profitable. Okay, use your phone for the QR code on the slide. We'll put a link in the chat. And there's my email there too. And we'll get onto the questions in a second. We've also designed a quiz that you can take. We'll put that into the chat, and it's also available on the website. That will help you understand the priorities and steps that you can take to get your distillery profitable. So that's the end of the presentation. I'll hand back to Jeff to see if we have any questions to go through.
Thank you, Ian. Both the chat function in the meeting and the Q&A function are available for people to post questions if they have them. At the minute, nobody has posted any, so I'm going to ask you a couple of questions, Ian, just to start that ball rolling. You've got your 3 steps, and the second one is to know your numbers. How important in knowing your numbers, how much do you need to drill down? For example, how important is it to know for example, the unit cost of each sale, the unit cost of each bottle? How much effort do we have to put in to really know our numbers?
I think that's the level that you need to be looking at. It's really important to understand what things cost you, because it's easy to see to miss drifts in price increases. So it's really important to understand what everything costs you to make and to sell, so that you can make the right decisions on what you should be making and what prices you should be selling it at.
So it becomes a function of setting your prices according to what you need to work the profit into this system. Is that fair to say?
Yeah, but everything, if you know what, you start with needing to make a profit, okay? And then you know what your costs are, then you can start to go, so profit plus costs starts to get to where your pricing needs to be. So it is definitely an important function of every distillery to understand what it costs them to make each product.
Sure. One of the questions that has come through: are there any changes to the profit first system that you would recommend if the distillery is a side business and not your main income earning activity?
As often is the case with these things, it depends. So it's the managing the cash is to simplify things for you, and so whether you combine income from your main activity and the distillery as a side issue into one pot, or whether you regard them as two separate things with separate pots, is sort of it's sort of up to you, and it's how easy you find those things to do. So I've got clients who put everything in the one pot, and then they distribute to the profit first bank accounts out of the one pot. And I've got clients who go, well, I've got a distillery and I've got a consultancy business, and my consultancy business has its own set of profit first accounts, and my distillery has its own set of profit first bank accounts. So it depends, and it depends on the individual and how they'd want to run that. But the same core bank accounts should be used.
Bill has sent through a question, and this is a common one. I've heard this one asked of you at conferences that we've been to. What about setting up more accounts, say for CapEx or repairs and maintenance, or is this getting too granular?
No, you can get as granular as you want. I've heard stories of some people doing this with like 30 plus bank accounts. Certainly from a distillery perspective, depending on like, for example, excise, if you're an excise payer, then having an excise account would be an excellent bank account to have. I often recommend having a GST account, which you might put superannuation into that account too, so that you've always got your GST money and your super money always set aside, ready to go. And you know, if you're buying barrels regularly, if you've got a particular project that you're going to build towards, like a CapEx, then certainly, yeah, having a separate bank account for those sort of things can really give you clarity. You know, when you're getting to where you can afford to do something.
You probably would add PAYG tax to those GST and those types of taxes. I do know that the tax office through the COVID period, I did look up these statistics while you were speaking. The tax office provided an enormous amount of support to small businesses by not chasing up a lot of the debts through that COVID period. But in March of this year, they announced that they are now tackling the small business debts that are on their books, and they have significantly increased their insolvency activity. So people do need to be very aware of their tax obligations, and they do need to be planning to make sure that those costs are covered.
Yeah, I'm working with one distillery right now, and we have a loan repayments account. And so every week in that one, we allocate funds across all the different bank accounts. And one of those accounts is a loan repayment account. And that's specifically just to meet the loans that they've got, and one of those loans is basically a tax office loan that goes out every week to repay past tax debts.
Kevin has asked, is the bookkeeper the same as an accountant?
Not necessarily. I mean, some accountants do offer bookkeeping services. The bookkeeper is really going to do your data entry. That's what a bookkeeper does. So it processes all your bank transactions, matches up to your sales invoices, matches up bank transactions to invoices or receipts that are in your accounting system. And that's keeping all your bank stuff up to date. Whereas an accountant, really, I'd say, is the person that comes in at the end of the year and prepares your annual accounts and your tax return.
My view is that it would probably be fair to say that bookkeepers should be charging you less than what an accountant would charge you for services. So you need to work through the process of what are these things costing you and get the appropriate person for the position. We have another question. Are you linking all of these bank accounts back to zero and reconciling each of them all each month?
Yeah, so I mean, yes, you can feed all your bank accounts into zero, and I would recommend that you do feed all your bank accounts into zero. Whether you do your own bookkeeping or you've got a bookkeeper that's going to make that life very much easier to do. It takes a second to match transactions in Xero. So there's no real time involved by having the multiple accounts from a bookkeeping perspective. What they give you is much more clarity, and so the bank accounts work really well because it's the clarity that's the important part. The bookkeeping really doesn't take any time to, as I say, to match transactions. So yes, feed them into your Xero accounts or MyOb or QuickBooks, whatever you're using.
I might also add that you need to make sure that you talk to your bank to make sure that you're getting bank accounts that don't have ongoing account keeping fees. There are bank accounts available in that manner. You don't want to be paying fees on multiple accounts
That's
if
right.
you're using this system.
Yes, that's right. And there are banks that offer free business banking, so they're the ones to be looking at when you're opening these accounts.
Now, another question from myself. You've identified bookkeeping as a real time-saving opportunity, but I'm sure that all of us will be able to identify one or two tasks in managing a business that they are not as effective at as they would like. How do you go through the process of working out what activities are worth outsourcing and what activities are not worth outsourcing?
That's an interesting question. I think usually you start with listing what you do and tracking what you do and how long things take you. That naturally you'll have things that you don't like doing. You'll know there are things that you're not very good at. Usually they're the same things. You're not very good at them because you don't like doing them and you're not particularly interested in them. And so, if you start to record those, create a list, see how much time they actually take you to do, then you can start to then put that list into groups so that you can understand where things fit together, so that you can then go, okay, I'm spending 4 hours a week on social media and I hate it. So can I get somebody else to do my social media? And I know it's a 3 or 4 hour a week job. So you then looking to outsource to somebody to do specific tasks, as opposed to going, oh, I need an assistant, and expecting that assistant to be able to do everything. You want to get somebody who can do the specific things that you need. So create the list, pull things together that fit together as a skill. And as I say, usually you're going to start with the ones you hate doing, because they're the ones you're not very good at.
Thank you, Ian. It looks like we've covered most of the questions that have been asked today. I want to thank you for your presentation. I mentioned that this would be the webinar would be published on our website. We'll also publish the presentation notes that Ian has used. We are working through the process at Spirits Victoria of coming up with more webinars that we want to put to members. They are being very well supported, both live and the recorded versions. If anyone has topics that they think they would like us to tackle, if they think they would like us to find some of the authorities out there to talk about, send us an email at info@spiritsvictoria.org.au and we'll put it on the list. I'd like to thank everybody today. Thank you, Ian, for your presentation. I'd like to thank everybody for attending and showing an interest. And we'll let you know when the next webinar is up and running. Thanks very much.